Good morning, namaskaram, wherever you're listening. Today, let's discuss the Naked Traders book, Trading Strategies by Robbie Burns. So, I think this is the book which I'm talking about. Definitely, the author talks. This is not for the starters, but I would say out of millions of pages of contents. This is one of the book you can read it. You can make some things are very interesting. Some things you may feel like if you already read some books, you may feel like duplicate. This is the presentation. So my name is Niranjan. You can see it here. You can connect with me later on if you want. So let's me present this. So important thing is he talks about how you have to control your emotions when you are investing. You have to be disciplined. So one of the examples he says is when you buy back the bounce. So the stock might fall down, and you do not buy a stock which is falling, but buy the stock if it is the same stock which is bounced back. Technically, the stock is saying that is a strong thing. And he also talks about trading on news. If a stock comes good news and the stock falls, and you can also see that if the stock is recovering or not. If the stock is recovering, that is a very important thing. These are simple things like checking the company reports, checking the net debt of the company. If the net debt is zero, definitely the company can't go bankrupt. Checking the key facts. If the company is rising the dividends every year, then it should be in your shopping list. Check the charts of the company which you want to buy. The PE should be less, the price earning ratio. That's what I always said. This is not like very starting kind of a guy. If you do not understand what is price earning, you have to go and look at the fundamental courses and all those things. So all you have to look at your stop losses. So all those things should also be considered. What he says is about the stops and the investments is your stops are the ones which products your capital. If you're buying into share that's going to straight up and there is no support to see the chart, try placing a stop at 10 or 50% below the buy price, depending on how keen you want to hold the shares. Whatever happens, let it go. So his point of thought process is buy near the supports and keep the stop losses also at the support, so that way I think your loss will be less. Keep an eye on the news. When coming to the news, when big things happen, they can affect prices. There is nothing wrong with banking a profit even if the share goes a little higher afterwards. You should always think, I'm happy with the part of the ride. I am unlucky to always find the top or bottom. So nobody makes nobody can make the real bottom and real top. If you have seen it, nobody can identify. If someone makes it, it's like reminiscence of a stock operator. There is a quote saying, if you don't commit a mistake in the stock markets in a month, you will be the richest person on this planet. So don't expect you to catch the tops and the bottoms. So do not expect that. The important other thing what he talks about is always keeps eyes on where you are out and about and get chatting. So the financial intelligence might pick up. So when you are going out, even let's think you went to a restaurant or you went to a branded hotel chain. So you can clearly see how the customers are treated, how the invoicing is happening, how the billing is happening. You can speak with them, and if the employees are happy and if they says the business is running, technically the employees are saying my business is very good. Technically, then you are by just chatting with someone wherever you go, you can get the financial intelligence. So this is one of the strategy. So spotting winning stocks, fundamentals, as I said, you have to look at the fundamentals, growth indicators and market position. This is important. If you do not identify that, if you do not know what are the fundamentals, you can go the course. Growth indicators, you should also look at the growth indicator. So something like, it is better to be in shares exceeding expectations than those issuing profit warnings. So sometimes companies issue profit warnings. It is good to not to be there if the price action suggests that. If the price action is suggesting in shares where they can exceed the expectations, then you can get into those kind of shares. Sometimes you need to move fast if report looks especially good. So if the report is really good, it is go and hit it, and keep quick stop losses. As earlier discussed, the nearest stop loss is nearest the support. So do not, again, like, do not look at when you look at the news, if the news is positive and the price is also behaving as per the news, then it is very good thing. Sometimes I think you have to also use, I mean, if you're going in airlines, you can easily see how the airline staff is behaving, and inside the news you can speak with them. It could be airlines, it could be hotel industry, or wherever go. So don't think this is an insider trading, because insider trading is only when you definite knowledge that the market doesn't know about it, which could substantially alter the company share price. So I don't think you are you are going to do this. So this is not insider trading, so don't worry about it. If you do not know about a company, it's okay to ask your friends and family too. And if you see, because you heard a news, and if your company friends makes it okay, this is a good thing to buy, then and you also see all the stock parameters are good, and that makes sense to buy it. Another thing he talks about is uh, financial health. You have to have a checklist of financial health, management quality, growth prospects, and competitive edge of the stocks. So as we discussed earlier, buy bounce backs rather than buying at the bottoms and selling at the tops. So let's talk about the buying now specifically. If the conditions your trade changes, perhaps just bank the profit. So let's think you bought it, but again there is a bad news out there, and you already made money in that, so it is good you exit rather than entering it again. So beware of stocks which are operator or bandwagon stocks. So if something is offloading continuously, do not be in those kind of stocks. Someone might be making millions of dollars, millions of profits, but you should not be losing your money. And do not get emotional in investing. This is the most important thing. If you get emotional to a person or a management or to a statement what they kept, because emotion based decisions are not good. Emotion leads to bad trading decisions. It's always monitor yourself for signs of emotional taking hold. Use stop losses, acknowledge your mistakes, and if the trading thesis is unemotional, then only you get in. If it is emotional, do not even try to be there. And make sure the companies which are trading in for short term or long term, if you are delivery oriented guy, definitely make sure. I think the whole book talks about the delivery only. It never talks about intraday or that kind of a trading. So don't hang about with the trend. Don't get hangover. If you think something is going wrong, hit it. And I think it talks about FTSE there, but I would say, like, yeah, ETF or anything like that. I think you can go and buy. So that way, I think you will not have any issues if you are buying the ETF part. Change your mindset. If you have to change your mindset has to be quick in the markets, because it it is the best occupation or employment or a job, if I have to say, if you really wants to make profession, if I have to say, if you have to make money. But the important thing is, if 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 you do not know how to do it, it is very tough. So have a coach if you want. Let the coach be there and help you. Do not take things personally. Be completely honest with yourself. Know your strengths and weaknesses. Override your default buttons. Beware, excitement is always there, but beware of the excitement. It's like beware of dogs, beware of excitement. Don't take it personally, because capital is the richest element on this planet if you want to do something big. If you're stuck in a rut, recognize that you need a change. It could be your mindset holding you back. Takes the coach, take the coach's help, like me. It might be worth finding a trading mindset coach if you can't move forward, because if you're looking for a trading career and if you don't have a trading mindset, it is good not to be in trading, but if you still want, it is good that you know technical analysis basics. You should understand moving averages, supports, resistance, volume analysis. If whatever you're buying, if all these things are supporting, like moving averages about 200, good time for a long term buy. If the stock is at support, just do it. And moving averages 200 is also good, and the volume is also the trading for highest for the last 10, 20, 30 trading sessions or time periods, then it is good. Like this, we are standing on 30th week, 200 moving average, and the stock is at the support and the volume is the highest. Go and get the stock. If your strategies aren't working, change them up. So continuously pause your strategies, past strategies, and start looking. Avoid the usual suspects. and start going, because that mindset is very, very important. um, there is no harm in going into cash for a while. If you don't know what to trade, you don't have to be always in trading. You don't have to invest. If your share price keeps gradually falling daily, the market might be telling you something. So look at the price action. So you will be definitely rich. You can join the course. I will tell you a couple of secrets in that. Always check the clues that something might be changing. Have a good look at recent statements of the negatives, what's happening with the stock. Another thing is, share may decide to break up well, but see if the breakup or breakdown is it sustainable. If it is sustainable, just do this. There are sometimes the companies like jam up, jam down, or gap up, gap down, circuit up, circuit down. Beware of great stories not backed up by profits. Watch out of loss making companies. Don't buy if there is no sign of future profits. And can this company run out of cash? In sense, I have seen Jet Airways, which is a good company, but Naresh Goyal, I think there is an enforcement director case on it, where he has scuffled the company's loans, and he moved the money to his family accounts. See those kind of situations where you can clearly see profits are not coming, and the company founders didn't do well. So those kind of companies you have to be well. So make sure the confirmation not only in the price, if the profits are saying that confirmation is happening, and define your trading strategy with the goals, style, and plan. Have a plan, and test and refine with your coaches how things are happening, so that will change a lot. Risk management, position sizing, stop loss order, diversification, risk reward ratios. If you see here, this man stands up here and he's trying to balance. Do not never ever do like this, because you might lose your life. So capital is also like this. So never, you do not have to do like this. I would definitely say it is better than walking here. You can walk on a bridge, which is the thousands of people have walked on it. Look for multiple income streams in form of dividend, in form of interest. If your company is paying, so that's one thing he talks about. He talks about IPO. Make sure. I think in one of my courses, I'll tell how to make money in the IPOs. If you want, you can join that. Trading in the range, you can use the covered calls. I don't think he talks about covered calls here, but trading the thing, he says, if it is in a range, identify the lower range, buy there, and keep a stop loss nearby. So since the stock is always at the lower range of valuation, you are always buying at a cheap price. So buy the shares if you are not comfortable buying at a high. Buy quality and a bit of momentum. That makes it sense. If you're buying a good P, you have to compare with sectorial PE. Considering PE around 5 and growth rate is very nice, then momentum is there. Just go and buy it, and don't put too much money in one. There is a saying: don't put all eggs in your one basket. The same thing applies here. Do not keep all your chips in one place. So let's have capital diversified enough so you can make some money out there. So common trading pitfalls everyone do is over trading, chasing hot tips. Do not do this. Do not over trade. Do not ignore fundamentals. Do not do do not have your decisions based on emotionals, because emotions will always excite you, but logically it may not give you the results. So I was talking about low PE. I was also talking about low PEG. So forward PEs, look at the forward PEs. And if you are able to get the good shares, and if you have bought them less than 5 PEs, hold on to them. I think there is a standard set of rule for multi-baggers. It is like less than 5 PE and ROE around 25 or 25, around 25, and it is paying 5% dividend. 5, maybe 5, 10, 25, something like that. You see, if the company is paying dividend, that means it's making profits, and if the PE is less, and if the return on equity is around 25%, there it's clearly saying the stock is going to be a multi-bagger. So Christmas rallies or festive rallies, observe them. May not be always it is good. Amavasya, Purnami, things are also rallies are there. There are cycles. Understand the cycles. Have screeners build onto your missions if you really want to trade well. screeners is one thing I want to say. So if you have the patience, see the tree becomes very big, and then only use of fruits. You will not get the fruits on the day one when you plant the seed. So important thing is compounded growth, decision making, and I was talking about screeners. So have the screeners. So I think in our courses we will talk about the screeners part also, how you can keep the screeners. There are charting, and you can even use the screeners in trading. We will talk about that. Mm, Learning from the case studies, I think success stories, learning from the losses, market trends, have in a journal. Definitely, this is mandatory. When I started having journal, I started making profits. So I would recommend that to everyone. Not that I didn't have losses, but I learned lessons from my losses and looked at the market trends. Essential trading tools, stock screeners, financial news. That's what I was talking. Portfolio trackers and educational resources. Learn as much as possible so you can make more money. So building a resilient trading mindset, emotional intelligence, look at your emotions, continuously learn, adaptable, be adaptable to the solutions. You can't have a bull mindset in a bear market, and you can have a bear mind in a bull market cycles. Both of them will harm you. There is a saying in wizards, stock market wizards: bulls makes money, bears make money, and pigs are slaughtered. Don't be a pig here in the markets. It's important you be conscious trader. Journey to a trading mastery: you be a beginner course, you do intermediate course and advanced, and then you will become better guy. Path to stock market success, as we discussed: continuous improvement, educate yourself, practice consistently, stay disciplined, and embrace the journey. So these are the things. Thank you, thanks for connecting. We will get in touch soon. You can connect with me, Batham. Thank you. Have a good time. You can see the links in the bottom.